Hey folks, welcome back to Real Estate Investing Unmasked. Today I'm going to tell you a little something about what's going on with the economy right now. At this moment, we have mortgage rates that are looking like they're going to go up some more. We had a month, just a couple months ago, where the interest rates had dipped. But right now, the Fed is talking about cutting back on how many of their mortgage-backed securities they're going to invest in. It doesn't mean they're going to stop, it just means they're going to cut back a little bit. And what you're probably going to see from that is home rates start to go up, home lending rates. So when you see that the cost of borrowing money goes up, that usually has a downward pressure on prices. The only problem is there's a massive upward pressure on prices right now, not because people are in a buying frenzy, it's because goods are not available. The supply chain right now, the global supply chain, has been bad for a long time. For many years, way before the pandemic, it was bad. Well, it's all coming to head now because the economy is starting to catch on again. You're trying to get these gears to match up so that they can turn. But with the economy having been shut down for so long and then trying to come back together again, it's more like the gears are hitting each other and they're trying to figure out where they can get those spaces together to start working properly again. Now, there were issues with truckers bringing stuff from the ports inward. There's issues with people loading up containers over in China. There's all kinds of issues with the supply chain that before, because it had slowly grown over time, was not an issue. Why does that matter when it comes to real estate? The builders that are building homes to kind of build the supply, when there's enough supply and the demand stays the same or demand goes up, supply is what causes the price to go up and down. So if the builders are charging more, or are being charged more rather, for drywall, for cement, for building materials in general, you're going to find that they have to raise their prices to hit the profit margins that they promise to their stakeholders, that they promise to their investors and their shareholders. So you have an upward pressure on prices. You have a downward pressure on prices from interest rates that are going to be going up. As a real estate investor, I want you to think of this as a huge opportunity. Right now is probably the best time to get a loan, the best time you're going to find in a long time. And the unemployment rate is being crazy. I don't feel that its underlying pressures are normal. I think a lot of people are looking for new jobs, having these new skill sets that they acquired over the last year and a half where they've had to work from home. I believe people are starting to see, hey, wait a minute, I don't have to work locally. I can work remotely. And there's pressures from the government to get vaccines, and there are people that don't want vaccines. I've got a neighbor not very far from me who's an emergency room nurse, and she wants nothing to do with it. Whether that's your point or not, it doesn't matter. The point is there are people that are leaving their work in droves because they don't want to comply. And so they're looking for new work, or they're starting new businesses. And so you see that unemployment go up. You see a lot of people who are not set in their business looking for other work, as in, I'm not planning on being here for 30 years, so why don't I find the next highest bidder? What in essence that does is also causes wage inflation. When wage inflation takes place, that's when inflation is really going to come in and set in. You've got a lot of goods, paper goods. Procter & Gamble just recently said that they spent $2 billion more for their goods than they did last year, or the previous years. They also spent, $200 million more on shipping costs. Those costs are going to come to you as a consumer. And the reason why this is important again for real estate investing is the house payment is usually the largest payment that somebody makes out of their paycheck. So as a real estate investor, it is probably going to be one of the largest payments you're going to make when you're buying an investment property. It makes it harder to buy property, but at the same time, if wages go up, again, that gives people buying power. So that means if interest rates come up slightly, but inflation comes up more than what the interest rates are, then people's buying power is going to increase. If people's buying power increases, that means they can afford more home. See, and there's definitely a ratio there. If I have a raise of an extra $1,000 a month and interest rates go up to where maybe instead of being able to afford $1,000 more a month in real terms, maybe I can afford $800 more a month, inflation adjusted, right? But that's still $100,000 to $150,000 more I could borrow than I could before. So you're going to find that home prices, they shouldn't be going up the 15-20% like they did in this last year, which has just been insane. But you will still see them going up. You'll probably still see them go up 5 to 10% over this next year. And with the only way that would really be brought down is if interest rates were to climb dramatically, because then the cost of borrowing money would go up. It'd make it harder for people to buy a property. So I wanted to get this out, that there are a lot of factors that sometimes when you hear the different things going on in the economy, sometimes it does affect real estate investing. So do take a look right now. If you're in a situation where you've got the money and you want to buy a property, this is a really good time to buy. Now, I know that I've said in the past that it probably would not be a good time because of inflation's coming, that they would have to raise the interest rates, but the fact is the Fed is being slow at raising interest rates. They're being very slow at allowing interest rates to rise because they see that high unemployment. And to me, it's almost a false narrative that the unemployment is high. You've got a lot of people volunteering to not go into the workforce. There are tons of jobs available. Last I had heard, there are more jobs available than there are people to fill them, which tells me people are being very choosy on where they're getting their jobs, and people are voluntarily leaving their jobs to go find another job. Again, that is a fake number when it comes to unemployment. It's an inflated number to say, oh, we have so much unemployment. The reality is people that want to be employed, they can get a job right now. And so people are being choosy. The other thing is the government has doled out a lot of money. Here's another issue, and I hope that you watched it to this point, because here's another issue that's going to be coming up in April next year. For people that have children, the government was giving out paychecks, right? They're giving out money, $250 per child per month up until December, and I think in December it's supposed to be $500 per child, and that's going to cut off the support, right? The child tax. So what it is normally folks that have a kid get a certain amount of money as a tax write-off, or as a tax credit, excuse me, not a write-off, but a tax credit every year. Credits are better than write-offs. I'll have to talk about that in another video. So they give a tax credit every year for people that have children, and it's a good incentive. That's why it's theirs, is the Americans will continue to have children. What the government did is they said, we're going to give you that money ahead of time to basically act as a stimulus, just another way of them to dole out money. Now here's the problem. A lot of people receiving those monies are not expecting in April to come to the table and have to pay that money back. See, as a tax credit, that means I came to the table, let's say I came to the table and I had $10,000 in tax credits. Now I have 5 kids, so that's quite doable, right? I come to the table and I have 5 kids, that's $10,000 in tax credits. Well, if my tax bill for that year, based on my income, is $10,000, I walk away paying nothing. However, if I'm used to doing that year after year, and this time I come and talk to my tax accountant and I say, hey, how much do I owe this year? They say, oh, you owe $10,000 again. All right, cool. And then I say, okay, how much do I have to write a check for anything? They're like, well, yeah, actually it says here that you took $5,000 in tax credits ahead of time, which means now you have to pay $5,000 back. Do you think that those people that have the kids are paying attention to see that they will have to pay those funds back, those credits back? I don't think that they are. And I know, granted, there are some people that get a huge tax return come April, and they're expecting that huge tax return. They're not going to get it because half of their tax credits were paid up front, which means when they get that tax bill, all of a sudden there's going to be a huge stop in people making their payments, people that have kids anyway, which I think is a massive amount of people. I believe they're about a third of the United States is made up in children. That's a lot. So when you figure there weren't a whole lot of people who said, no, I'm opting out of getting those prepayments, you're probably going to find that come April, when it's the hottest real estate market, you're going to find a lot of people with tax bills they did not expect because they got money when they didn't expect it. So I feel like we've got a wave coming of some major issues when it comes to that. Anyway, I hope you guys got some information from this. I hope you enjoyed that. You can visit me at my website, www.watchbobonyoutube.com. Don't forget to subscribe. I come out with great content all the time, and I will see you next time. Thanks for watching.